One of the fundamental questions when starting a new business is, should I run my business as a sole trader, a partnership or a limited company? The government have in recent years been herding us all in the general direction of the limited company, as it allows them to monitor statistical business data and enforce deadline compliance via Companies House. In the majority of cases, therefore, under current legislation, it will be preferable to run your business as a limited company. Some of the benefits of doing so include, well, firstly, there's the limited liability aspect. A limited company is a separate legal entity distinct from ourselves as directors/shareholders. If your business fails, your house and other assets are not at risk, unless of course you've guaranteed any debts personally, or you've been guilty of fraud in your conduct as directors. An alternative to the limited company is the limited liability partnership, or LLP, which is favoured by some accountants. Whilst, as the name suggests, this will have the bonus of limited personal liability for partners, it will lack some of the other benefits of the limited company, such as the associated tax savings. Next is the image. The perception held by most people is that limited companies are larger entities, and this automatically gives increased credibility. The final main consideration is the potential tax savings. Currently, a self-employed person will pay a basic rate of income tax of 20%, rising to 40% from £32,000 of taxable income, plus 9% of Class 4 national insurance. This obviously represents a potential minimum saving of 9% on every penny earned for a limited company. Even with the slightly increased accounts cost involved with a limited company, it can be well worth considering the change for those with significant incomes who are still operating as sole traders. It's also worth noting that, under self-assessment, we pay our tax 6 monthly in advance. Corporation tax, however, is currently paid 9 months after the year end, giving us some potentially quite favourable cash flow assistance. On the flip side, of course, if our business is making less than around £9,000 a year at current rates, then the financial argument for limited companies will not be relevant, and many will still opt for the slightly simpler structure of the sole trader business.